how much of risk-off there is left in the global equity markets that is going to worry Indian markets. Michael Avery of Rabobank joins us on the phone line. Morning, Michael. Thank you very much for joining us. There is yet another round of risk-off that we are seeing now. The Dow and the S&P are negative year-to-date as well, below the 200-day moving average. If that is the mother market, then are you going to see severe reverses, outflow of funds from emerging markets?
Well, at the moment, it seems that we're seeing severe outflows from many different markets, aren't we? We're seeing downward pressure on commodities, we're seeing downward pressure on equities in the US too. All of this, to be honest, is not a complete surprise because we are in the run-up to a Fed rate hike. And we've seen previously that in the run-up to Fed rate hikes, the market does try to vomit in order to get the Fed not to raise rates. And I think we will see more of that leading up to it.
Yes, we just had a quote from Chris Wood saying that the Fed is not just data dependent, it is also market dependent. And with the markets now taking such a fierce view, do you think that the December hike is still a given, or is it still just, maybe a 60% chance?
Well, I would say it's got a more than a 50% chance, so therefore you have to pencil it in on your spreadsheet, as it were. But if we continue to see the markets, throwing up all over the Fed, then I think their resolve will probably start to falter as we get nearer to that date. But it does seem to be effectively a game of chicken, where, if everything sells off aggressively enough, they feel they can't do it. Ultimately, one day we're going to get to the point where some Federal Reserve members say, well, we have to do it anyway, and never mind the markets. I'm not sure if this Fed is that Fed, but we will find out as we get nearer the big day.
Okay, well, there are some big growth concerns emanating out of China once again, Michael. The October bank lending data has come in, and that's halved compared to what we saw in September. Of course, there was that big holiday period as well. But ex of that, are you worried about the growth slowdown exacerbating in the last couple of weeks?
Well, basically, I think, we don't want to get too caught up in the tiny little micro ticks up and down here. From a structural perspective, China continues to slow. But that's obviously the overall story. If we look at individual sectors and individual states and provinces within China, you can see that different parts of it are doing very, very well. But overall, it continues to slow, and all the rest in between, really, to be honest, is just noise.
How much worse does it get in India, you think? Our previous low for the Nifty, the benchmark index, was 7550. I mean, a near-term low. Does it plunge that now?
Well, I don't like to use the word plunge, even though I'm quite frank in most of my discussions. But I can certainly see downward pressure on equities in many, many different markets. Obviously, India is not an exception to that. But as I, constantly reiterate when I come on your show, I think that while India is not cheap, the relative fundamental story there is still better than it is in many other places, and that does offer some kind of underlying support, even if, for example, purely hypothetically, if the Indian market were to go down 3% and everybody else goes down 6 or 7, you can still feel relatively happy in India, even if you're not actually feeling it in your pocket as an individual investor.
All right, Michael, we'll leave it at that. Thanks for joining us and giving us your view. That's the word coming in from Rabobank. They see downward pressure on equities in the near term.
This is exactly what Samir Arora told us at Mahura Trading, he said.